Because I have to confess that, since the pandemic hit us, I've had so many friends and acquaintances reach out to ask me, Steph, how can I pivot to digital? It's a real concern. And to take us through how traditional industries can do exactly that, we have our next speaker, who is Florian Hoppe, partner of Bain Company. And Florian is based in Singapore, where he co-leads Bain's digital practice in Asia Pacific and is a senior member of their telecommunications, media, and technology practice. Florian's got more than 15 years of management consulting experience throughout Southeast Asia, Asia Pacific, and the US, where he's advised clients on many aspects of digital transformation, customer growth, and innovation. That's an impressive CV, Florian. And now I'm going to hand it over to you.
Thanks very much, and very excited to be here. Unfortunately, no chance to meet in person this year. As you said, I'm based in Singapore, but work a lot across Asia Pacific. Although the last 6 months, like many of you, I've spent mostly at home, which has been an interesting change of my life. That hasn't meant that our work has stopped. And I was asked to spend a bit of time talking to you around what we see in terms of demand patterns and trends in traditional industries. And I think, as Cairo was already alluding just now, there's been a massive disruption on how people engage. So we go to the next page. Well, first of all, I think everyone on this conference has seen a version or another of this cartoon, who has driven your digital transformation, the CEO, the CTO, or COVID-19. And obviously, it's been a massive disruption for many of our clients. And I think if you go to the next page, the main driver of this really was this massive shift in demand patterns. I think first, the massive rise in e-commerce, but really also importantly for many companies, a sudden complete disconnect from their customer base. So there's the extreme case, obviously, of airlines and malls and mall operators where customers suddenly were just away. But there's also, we were just talking about the average consumer products or FMCG company who suddenly lost their usual go-to-market channels because they were just disconnected from traditional channel access and had to pivot very quickly to e-commerce, direct to consumer, other delivery channels, and actually many places also different SKUs because people suddenly asked for very different kind of baskets and products that they bought. So just on the page on some stats, I do want to mention, so if you go back to the previous page, I do want to mention, I think outside this theme on the rise of digital and technology and kind of all of our lives, I think growing technology platforms, the whole point here on a shift from a focus on efficiency, which has been really the corporate mantra for the last 20 plus years. So every year is 2% efficiency gains, supply chain gets more and more optimized, just-in-time inventory, to a much heavier focus on resilience. So pretty much any of our clients has shifted gears to have backup systems in place, call centers, other people to help on customer service, new supply chain solutions, new delivery channels, partnerships to increase capacity in times of need. So it's an interesting question, like how much of the digital automation shift will stay, but also how much of that focus on resilience will stay, which obviously in many places was enabled by digital. Of course, it enabled a much quicker pivot in supply chains and in operations for our clients. Now, I want to spend a bit of time now on the next few pages talking around kind of what we saw in the market. So if we go to the next page, this is just a view on just the relevance of digital transformation over this period. So it's really staggering to see if you look at the mention of digital transformation with executives in earnings calls or press conference calls, it's gone up by 40%. So it has become a true top of mind topic. Not surprisingly, the themes have been very much around cloud enablement, which was one of the quickest paths to scale, digital technology, mobile digital engagement, but importantly also kind of a continued overlay on machine learning, artificial intelligence. So this is really a top of mind topic, and budgets are very quickly shifting right now, and people are really quickly shifting right now to help address this. And I would argue this is even more true in Southeast Asia, where historically this has been a topic, but it hasn't exactly been top 3 agenda for many companies. And I think this, if anything, has driven home the need to do something fast for pretty much any company in the Southeast Asian space. If you go to the next page, this is just a view on what that means in the stock market. I think the left side, all of you who have been following and investing in tech stocks will be familiar with this picture. But if you look at the emerging cloud index and NASDAQ, which is a red line, versus the average S&P 500, there's obviously a significant outperformance by companies like Shopify, Zoom, Salesforce, and others. But importantly, I want to focus your attention also on the right side here, which is an analysis we did on the top spenders on digital and on new technology. We used a proxy here of ICT spend for these companies. And their performance as on stock price during the pandemic relative to their industry. And you can see a significant outperformance for companies that actually have invested in technology, have set up a baseline and foundation over the last few years, over this period. So again, technology pays, and adjusting your business model really helps in periods like this, but also establishes your long-term relevance. I think I like the example that Cairo was using earlier on agriculture. You can still run a farm without using sensors, but chances are your efficiency will be 20, 30% below somebody who is using new technology to run the same farm. And consequently, your margins are going to be compressed, and your future right to play in competitive relevance is going to reduce. Now, if you go to the next page, again, this is just another data point to reinforce the focus and the attention that has been on mobile and digital engagement. So VC investments in the first 6 months, 2020, contrary to popular opinion, has not stopped. VCs have continued to invest almost at the same pace during this period. Slight slowdown, but not significant. But the focus has heavily pivoted to mobile and digital engagement above all others. And enabling technologies around machine learning, big data, really enabling this whole new digital ecosystem, where VCs now see most of the potential, also for the next 5 years. Now, what does this mean for our client base and the questions we see in the market? Really 5 points we'll call out, and I'll go in a bit more detail on the next page. But the biggest question probably is how and where is technology shifting business boundaries, and what is here to stay? I think we've seen, in particular, the channel landscape for many companies heavily evolve. We've seen what's happening in payments, banking, and financial services, where there's increasing rise of new digital financial services players who are taking a share of the market, but also increasing competitive overlap as businesses have been pivoting and adjusting to the new normal. They've been starting to entrench on each other's turf. You're seeing consumer products companies starting to debate about direct-to-consumer channels, which overlap somewhat with some of the retail partners that they had previously. So a lot of shifting boundary lines, and long-term potential changes are here to stay. The topic on customer and channel landscape, again, historically always top of mind for executives, but now truly critical to get right, because there's a whole host of new channels that they've now have to struggle with, and that have been increasingly relevant during this period. Resilience of end-to-end operations. I spoke about this question on kind of which footprint you should choose, how you ensure that your supply chains stay open, even if select parts of countries go into lockdown or logistics are interrupted. And then importantly, that point on how do we use our assets and capabilities in new and different ways? What ecosystems can we build? A lot of companies are sitting on significant freed up resources, and I'm not talking so much around cash here. I think cash is a bit at a premium, obviously, right now, given that we still face continued lockdown situations across the region. But the fact that a lot of human capital actually has been freed up by the current situation, and a lot of assets are sitting empty. And so how do you actually recycle these assets? How do you use them in a different way? How do you use your customer links? How do you use your loyalty platform to help drive new business opportunities? And then linked to that on 5, how do we actually use this to our advantage? Like, where and how can we accelerate? How do we free up budgets and people to drive and become this challenge over the next 5 years? Because it is a fairly unique opportunity. I think, as our global managing partner likes to say, the ground is soft right now. And we saw that after the last financial crisis in 2008, 2009, the competitive landscape reshape that happened in this period hardened very fast within 12 to 18 months. And so you had a very short period to really kind of pivot your business model, take advantage of the situation, and set up for the next 5 to 10 years. After that, it's much harder to shift your game and kind of reassert potential new roles with your customer. If we double click on this, there's a whole host of questions that companies are struggling under the hood with on the next page. And again, none of these are kind of easy to answer, and it's a very complex array to sort out as a combination. Typically, companies really pick areas which are most critical right now, and then build around that into other fields. So if I take a few examples, I think customer and channel engagement. We recently worked with a large consumer products packaged foods company, and I would argue kind of symptomatical. They didn't have a big digital commerce capability because they historically didn't need it. They sold on e-commerce platforms through some of their retail partners, through some of the supermarket chains that they were working with, but there was very little need to engage with a Shopee or Lazada in a direct way, or God forbid, thinking around things like direct to consumer, because the existing channels were working well and generated good margin. We're seeing increasingly now across the CP universe interest in e-route to market, digital commerce. How do we actually work with, and a significant ramp in capability, and in those pockets, demand for the right talent as well. So lots of opportunities here, I think, for people that have experience in this space, but also for companies to get closer to their consumers from the CP space. The other big theme obviously has been economic models. So we've seen a lot of companies pivot here. I think there were a few where it was the question of survival. So if you take airlines or malls, they had significant stranded assets, and I'm less talking about the planes here. I'm talking about the people. I'm talking around their customer base and customer access, the fact that they had credit cards on file, their loyalty programs, which were very, very powerful, but effectively unused over the last 6 months, who are all asking the question, where and how can we start using our resources? Which businesses can we pursue to leverage this, bring in cash in the near term, but potentially also establish a longer term, stronger role with our consumers as markets open up again and as we continue in our growth journey. So really the question of how do we build a second engine of growth for ourselves? Good examples from the tech landscape are companies like Chope, which pivoted very fast from booking restaurants to, in Singapore at least, booking beach spots and booking attractions, because there's limited access to each of those given the government regulations here. Or a company like ClassPass, which was offering gym memberships globally before that, and more recently then changed to pre-recorded videos on their platform, because obviously no one could go into a gym. I do want to highlight this last theme again on operations, so that we get a lot of questions from our clients on resilience. I think many companies were blindsided by the fact that call centers and outsourced vendors effectively stopped operating or provided very poor service experience during some of the early stages of the lockdown. And so the question on automation, customer service, questions on how to enable your staff, how to work remotely, say in a banking landscape, which often works with legacy systems and very tight data regulation, has been a big theme. I think increasingly now we see companies pivoting from these urgent topics to keep the house running to the enabling layer underneath 6, 7, 8, 9, 10 here, to really help accelerate their digital agenda over the next 6 to 12 months. On the next page, I just want to outline quickly how we think around this typically as we help companies navigate this. And kind of 3 big themes here, 4 big themes: digital strategy, business model, enablers, and the right orchestration. Now, there's a lot to get right when you go through a digital transformation. And generally what we try to anchor companies on is 1, obviously where you're starting, but 2, very importantly, what we call the future back. So where do you want to be 5 to 10 years from now? What are really the big stones for you to help move the needle, and against which you would map out your journey? If you go to the next page. So the question of kind of the digital departure, and then the digital outcomes, the direction that you want to go to. Then across each of these angles we just discussed, from the customer side, product services, economic model, operations, but also the enabling layer and orchestration, think around what are the right stepping stones. Again, a lot of companies are daunted by just the challenge of building kind of a true digital challenger, but it's absolutely possible if you think around it in waves. Uber or Grab or others weren't built in a day. They went through early stages of having one service model, which then evolved. Some of them failed and got closed down, they never heard of again. So that notion of kind of truly agile innovation, stepping stones of evolving a business model, but also clear focus areas and knowing where and how you pick your battles. So classic failure patterns we observe is where companies have a set of 150 initiatives in digital, but none of them resourced enough or with enough attention, and none of them with a clear outcome path that they want to drive to. But the observed failure mode is also true, where you have companies that purely invest around a long-term future without, again, thinking around the here and now. So kind of a good balance between the here and now, the future back, the 10 years view of where you're moving, and then taking it in these stages is really, really critical. And generally how we kind of go through this with companies as we orchestrate these journeys. Yeah. So that's a very quick overview of how we think around this topic. I appreciate we went at speed and we don't have a lot of time for Q&A today, but please do reach out. I think you can use the chat functions here. The team will share those questions with me. Very happy to respond to those, or please reach out to me directly. These days, LinkedIn is typically an easy channel. Please drop me a note if you ever like to chat a bit more.
Thanks so much, Florian. Yeah, that was a big topic to tackle, but I love that you included those real life examples, so we can see how real businesses are pivoting and adapting to digital transformation. And you mentioned ClassPass. Funnily enough, they're a very, very important client for us over in Singapore, and we have seen how they've consistently pushed the boundaries and have had to tweak their strategies. And if any of you are interested to read a little bit more about what we've done with ClassPass, their case study is up on our website, ada-asia.com.